welcome back to the Fourth Revolution, where we discuss stocks for your portfolio of the future. And today I'll be discussing inflation and this massive inflation number that we had yesterday coming out of April's CPI report. It was the largest CPI year-over-year growth figure that we've seen since 2008. It's illustrating that this monetary and fiscal stimulus that has been surging into the economy since the beginning of the pandemic is creating a huge amount of pricing pressure, and combining that with all this pent-up demand and more cash in consumers' pocket than ever before. I think this inflation is anything but transitory, and this is what Jerome Powell, the head of Federal Reserve, has been pushing for some time, is calling this transitory, saying it's going to be short term, but I think he might be wrong on this one. I think that this might be a longer term issue that could have deteriorating effects on not only our economy, but the stock market as well. And we've been seeing that with tech stocks taking a beating. And I really do think Jerome Powell is going to have to is going to be forced to taper off his balance sheet at the very least in this year. Obviously, he's discussed not touching his Fed funds rate until at least 2022, but I think that's going to be pushed up with, if these numbers continue to come out as they are. I mean, we're just at the beginning of this economic reopening, and we're only seeing the first signs of inflation. I think once things really open up fully, this inflation figure is just going to explode. And like I said, we're going to have to react to it. So why not position your portfolio for this inflation today? So I'm going to discuss a couple stocks that will allow you to benefit from this inflation, if not just hedge yourself against it. So let's dive into some of these picks and why I chose them. So you're looking at Teledyne Technologies chart on TradingView, and you can see the stock hasn't really taken off since the pandemic. We're trading only, about 10% or so above the pandemic. But this company, I think, has a huge amount of growth ahead of it. It just is actually acquiring Fleur Systems tomorrow. That deal is closing tomorrow. It announced it at the beginning of the year, and you can see the company, took a little bit of a dip. It only took about a week or so to get back to its normal trading levels as investors realize the value proposition in this company. It's complementary products offerings and proprietary sensory technology provide immediate value to this enterprise. And I think we're going to start seeing this begin to be priced in tomorrow once this deal is closed. But talking about inflationary numbers, this company is critical in industrial growth markets that heavily rely on it. And this allows the company to easily pass on these pricing pressures to their end consumers here with little to no margin deterioration. And I think this is a great stock to be holding going into this inflationary environment. And it's a growth stock. I mean, analysts are anticipating a top and bottom line growth of 44% and 15% respectively for 2021. And that's going to continue in the double digits in 2022. So this is a growth play right now. And I think it's not being properly valued considering, we can see its low average volume here at only 300K. I mean, don't get me wrong, this is a pricey stock, but that's still a low amount of volume. And I only have 3 analysts covering this on my ZRS platform. So this is kind of one of those under the radar plays that could provide a good amount of value for your portfolio, not only for this economic recovery, but for this inflationary environment that we are expected to see moving throughout 2021. So Equinix, this stock has traded all over the board since the beginning of the pandemic. You can see it's kind of consolidated. Obviously, this is a REIT, so it gets a lot of its value from its dividend in a rising interest rate environment. REITs typically see a little bit of a decline considering that the attractiveness of a high dividend stock gets lower and lower as fixed income obviously becomes more of an attractive asset. But this company is more than just a REIT. It is a growth company. Equinix is the largest data center REIT in the US, and it provides the largest cloud companies like Azure, AWS, Google Cloud with data centers for their growing cloud and AI applications. This company, I think, has a huge amount of growth moving forward here. And obviously, in an inflationary environment, I don't think Equinix is is going to be as impacted as many people think. I think this stock is severely undervalued at its current price today. Looking at price targets between 850 and even above $900 a share, which is a sizable upside from where we're trading at today. And like I said, I think when business spending starts to pick up again, I think we're going to see more and more spending in these data centers like Equinix. And obviously, Equinix is the largest data center REIT in the US and is heavily relied on by Microsoft Azure and, like I said, AWS and Google Cloud. So I think this company has a lot of upside potential, and this pricing pressure from yields increasing is overdone. And I think we're all going to see upside from here. So Freeport-McMoRan, this is Freeport-McMoRan on TradingView's site here. This stock has had a outstanding run from its lows. Trading at $5 a share all the way up to 40 something. Let's see what kind of, like 350% growth from these lows. And I think, I'm not overly sold on this. This is one of those stocks that the street loves right now. It's a mining company, and obviously as material prices go up in value, this is going to be a stock that benefits from it. But I think a lot of that's already priced in. But still, this is a big street recommended stock, and could still have a larger upside if this inflationary pressure continues higher. This is Spider Trust Energy ETF, ticker XLE on TradingView's charts. You can see we've had a nice upside from our lows. Our recent lows in November, obviously. The economy has been pricing in a recovery since the beginning of November, and you can see that with oil stocks and this ETF spiking. I showed this chart because energy is an obvious play for inflation, as this is one of the key commodities that's going to benefit. It would benefit. The pricing would go up because the pricing pressure would benefit from this inflationary environment as demand goes up and more people are driving in this post-pandemic world. So this is, we're still trading below where we were pre-pandemic, and I think there could be a good amount of upside here. I'm not overly bullish on oil. The International Energy Association came out and said that the peak of oil demand was in 2019 and we'll never reach that again because of obvious pivots towards alternative sources in electric vehicles. But I still think there could be a sizable amount of upside here in this inflationary environment. And we're seeing a dividend here of around 4%. So it's a hefty dividend with a nice upside if you believe in the oil story here. So the Federal Reserve expected this inflation, and like I said, they call it transitory, but I don't think they expected it to this magnitude. And I don't think that they're really expecting the right longevity of this inflationary environment that we're going to be seeing moving forward here. So check out the 4 stocks that I discussed earlier. And don't forget to check out Zacks.com/promo, where we are looking at the biggest and baddest blockchain innovation stocks. So check that out at Zacks.com/promo. Thanks for watching, guys.